Well, we are back, episode 3,
Feeling like a three-peat?
and that's just this week.
I'm just saying, shout out to, the Bulls.
Y-
Shout out to the Lakers.
You know it.
I'm just saying, I'm thinking, what are some other three-peat teams? I mean, it might be the Chiefs here in a minute.
Yeah. Let's speak that into existence. Let's just say congratulations in advance to the three-peat Kansas City Chiefs.
I like it.
I mean, I'm telling you, honestly, it's a little early, but I mean, even for what we've seen on paper, I don't see a team better than the Chiefs. I mean, I'm not willing to bet on anyone other than the Chiefs to win it all next year.
So should Odell go over there? Maybe. I think they need some receiver help. I'm just saying.
If I'm Odell, yeah. I mean, I don't like to I don't like to work other people's money like that, but sure. Odell, man, just take the league minimum, bro. I mean, just go chase that ring.
That's 2 rings at that point, right?
Yeah.
That's 2 Super Bowl rings.
But like I said, I don't like to, that's your money. If you feel like you can go get more, go somewhere else. You're probably not going to get that ring, though. But if you get that ring, get you closer to the hall. So what you want? You want the money, or you want, to be enshrined in the hallowed halls.
I don't know if that makes him Hall of Fame, but okay.
Have you been to Canton? Have you been to the Football Hall of Fame?
I have not.
I have, actually, randomly. I guess, brother-in-law, one of my brother-in-laws, okay. He lives in Canton, of all places.
Really?
Yeah, not a lot of black people in Canton. Surprise, surprise.
Okay.
Yeah. So, went to the Football Hall of Fame, and it is something I think everybody who is a football fan should make a pilgrimage to Canton, Ohio, to the Football Hall of Fame.
Perhaps. We might roll it into like one of them summer visits. Take your nephew or something.
Do it. I'm telling you, man.
So if my nephew sees this podcast, he's gonna hold me to that now. This is your fault,
Harvey. You're welcome. To Brian's nephew.
We putting this on Uncle Harvey's card. We using his frequent
absolutely not. Absolutely not. Because my CFO / wife would not approve that charge.
I'm gonna tell Jay that it was your fault.
No, it's not my fault.
All right, then.
It's actually your fault. You should have already taken him already. Facts.
Moving on to today's agenda items.
Now that we've that was a nice little intro there, huh?
Segue, definitely. So, Harvey, I heard you want to talk about assumable loans and how they work. Is that accurate?
Yeah, you know what? I do want to touch on that because I've had some clients come up to me that interest rates right now around 6.5% on average, maybe a little bit higher. I don't know. I haven't gotten the latest market update.
I'll add you to the list so you can get the daily updates.
You said it daily. I get mine weekly. I should be getting mine in the next like 15 minutes. So
we'll make sure we add you to the daily list.
Gosh, another bulk email chain. I'm gonna be a part
of.
Hey man,
look, I'm here to share information.
Can't you just text me? Do I have to? You can just be yo, interest rates are.
Go out of my way to text you when I could put you on the bulk list and I know it's going to go out.
Listen,
I like to be consistent and I like to have systems in place to make me appear consistent. So we'll just add you to the list, sir.
So I'm just one of 450 other people. I'm not special at all. Is what you just said.
You're quite special.
Well, then please text me. Jeez, just tell me what the freaking rates are. But I can be about my day.
Well, here's the other part though. I'm glad we're talking about this. Yeah. The rate can differ from person to person.
Yeah.
The VA rate is a different rate. The FHA rate is a different rate. The conventional rate is a different rate. Your credit profile could be, you could have a 780 credit score. You could have a 700 credit score. Right. You could have a 640 credit score. You could want to do, because when we're looking at interest rate, a couple things they're looking at. They're looking at your credit profile. Yeah. They're also looking at the type of loan program that you're going to do. Here's the other part. They're looking at the length of time. If it's a 30-year mortgage, you're going to have a higher interest rate because we are carrying the risk on your behalf for 360 payments for 30 years.
30 years.
Versus if we're only carrying that for 20 years or 15 years, you're going to get a lower rate.
Now, you've said all that. I still don't know what the interest rates are, but anyways, but
It varies. That's the answer. It varies.
But needless to say, it's safe to say interest rates are in the mid-6 range ish currently.
As long as you add the ish.
Ish. Oh, yeah, 6-ish. Yeah, ish. But
yeah, we are not quoting rates on a podcast.
No,
not
absolutely not.
Compliance people, we try to stay on their good side.
Yeah, I come off like it's like flowing from the old noggin freely, but no, there's method to the madness. I know to add the ish when needed.
We're gonna need a little asterisk at the end of this.
Yeah, like a little disclaimer beforehand. Like we will be talking about interest rates.
Your interest rate has everything to do with your customer profile. So if you want an interest rate that is special just for you, we can have a conversation.
But to that point though, I've had a number of clients be like, you know what though, like I don't want to pay 6.5 or 6.7, whatever interest rate that's on their mortgage package. They go like, I want to can we just assume the loan of the seller? And it's a creative way of doing things. I think for those of you that are big on social media and that follow real estate personalities, I'm sure you've seen some kind of video out there that will say, here's a creative way to get yourself into a home. The problem is that they hear assumable mortgages or assume a mortgage, but they don't know all the ins and outs of what it takes to do it.
You want me to give you an example of what it might look like?
Yeah, because yes, you may be able to get a much lower interest rate, especially if you're assuming a loan from someone that purchased a home in 2019 or 2020, right? It's great, but it can come at a very steep cost. So
100%. And some people, when they bought their house, you may or may not remember the attorney saying that the loan either was or was not assumable.
Correct.
Most FHA loans and VA loans are going to be assumable. And before you ask, yes, if you were assuming a VA mortgage, you have to be a veteran. Shout out to all the veterans. The people in my circle know I appreciate and love my veterans. I won't get into that whole lineage of my dad and my grandfathers and all that, but safe to say, I love my veterans. I appreciate my veterans, and I do my best to take care of my veterans. But let's just assume it's an FHA. Assume, no pun intended. But let's assume it's an FHA or a VA mortgage, and you're like, okay, I want to assume it. So let's assume that the current value of the house is $300,000. And we know we've had record appreciation. And if you all don't know what appreciation is, that's when you buy a house at a certain number. And because the value of the homes in the neighborhood go up, your values go up, and then the home appreciates in price. And so when you're looking at net proceeds, they're looking at the current value of the house minus whatever you owe. So let's just say the house is currently worth $400,000. And you bought the house in 2020, you've been paying your mortgage, and let's just assume that for nice, easy round numbers, let's just assume the house current mortgage balance is $300,000. So house is worth $400,000, you owe $300,000. If somebody wanted to come and assume your mortgage, assuming they qualify and all those things, they would owe you the difference in that money. So that's why you don't hear about assumables quite as often, because in this example,
or you hear about assumables, but they don't go into the details because of this high cost that you may be having to be on the hook for.
Right. So, I mean, you may see family members maybe doing some assumables because maybe you're okay with not recouping that full money. But in my example, that means you as the new buyer, the assuming person, you're writing a check for $100,000.
Not only that, you're still paying your closing costs. You're still putting down your earnest money. You're still covering your down payment. Oh, and you're probably still paying your buyer agent their fee.
Oh, there's that commission thing. It just keeps going up.
And thank you to this settlement. It will continuously come up going forward. But yeah,
the topic that doesn't end. Yes,
yeah,
it goes
this
on
is
and
a
on,
topic that doesn't end. Yeah. Yeah, no, that just happened. America, that just happened. You're welcome.
Yes.
Our LP drops later this year. We're hoping to win a Grammy, right?
We hitting the studio.
Oh yeah, man.
I'm
Right
with
after
it.
this.
21. Can you do
Yeah.
something for me?
Anyways, going back to it though, assumable mortgages, it's really important if you are a buyer considering doing something like this, is you have to have a lot of cash on hand. This isn't something where you can just go, I'm going to assume a mortgage and I'm going to finance and get my costs covered this way and that way. You need to have this money on hand. And I mean, you can probably talk more to what it takes to really qualify to even be considered for an assumable mortgage. But I also know not every lender, has that service where you can assume a mortgage. Only certain lenders will offer that service.
I'm glad you brought that up. The mortgage company that is doing the assuming, that's assisting with the assuming, is the same mortgage lender that is currently servicing the mortgage. One of the things I do love about Movement Mortgage is that we're servicing our loans, at least the vast majority of them. But yes, whoever is the current servicer, whoever the seller is currently paying, they would take care of the assuming.
And then how about qualifications? I mean, just because I want to get an assumable loan doesn't mean that I would necessarily qualify. Are there different qualifying factors for someone that wants to assume someone's mortgage?
You would need to qualify for it just like you would need to qualify for a mortgage you weren't assuming.
Okay. And then can you talk a little bit about like just on average what like kind of cash on hand, or is this like a case by case basis because you just don't know? I mean, you'd have to get your appraisal back to see, okay, this is how much equity's there.
Correct.
This is how much is left in the loan, because and that's the big piece. That's why assuming a loan is so expensive, is because you're basically paying out of pocket to the seller their equity. So if it's 100,000, 200,000, 300,000, whatever it is, you're on the hook for that. And not a lot of people can just shell out that money out of pocket.
That is true. And that is the exact reason why you do not see more people doing assumable loans.
Yeah. I mean, and for those of you out there that have that kind of money on hand and you see a house that you love and, it's at 2.35 or 2.5 or 3% or whatever it is, God bless you. You can go out, you can get yourself that crazy, crazy low interest rate, crazy, crazy low. According to today's standards, when it comes to interest rates, but it's going to come at a very, very hefty price.
So it sounds like you're out on the assumables.
I'm not going to lie to you. My bank account can't support a transaction like that currently.
Understood.
I would have to go the old fashioned way and rent. No, I'm just joking. No, on a serious note though. No. I mean, look, I mean, if you find a house that you absolutely love and you have extra money, to play with, and you want a really low interest rate, I mean, go, God bless you. That's just not the case for me. I would be more of the traditional route of, I just go and get just a standard loan or mortgage and go more the traditional route. But I think that investors or someone that's been in the game a little bit longer, maybe you're selling a home and you're going to have equity, you're going to have a extra stockpile of cash.
That's exactly who could certainly benefit from an assumable mortgage.
Yeah.
If you have net proceeds from a previous home sale and you have that additional capital, 100%.
Yeah,
could definitely make sense.
But I mean, if you're a first-time home buyer, this probably isn't the roadmap that you want to follow. Now, I mean, there are some outliers. There are some first-time home buyers that have a lot of money. God bless you. If this,
hey, maybe you stay with the rents, like you stay with mom and dad for a while, and you just saved your money.
Well, I do think at the rate that I think where home prices will be in the next 5 to 7 years, I think there's going to be a lot more people living with mom and dad into their 30s or renting for a very, very, very long time. Personally, right? Just
why couldn't you go in with a roommate? that you really trust.
I mean, hey, roommate, get a roommate, get 5 of them. Shoot, just cover your bills. That's
that's
my motto.
You don't have to be in a relationship with somebody to buy a house with them. So if you could find a property with you and a friend, or if, let's say it's a multi-unit. If it's a 3-unit property, you and a friend and the other friend, why couldn't all 3 of you go in on the property? It's possible. You can have more than 2 people apply for a mortgage.
I worry about the friendship though, because like, what if?
So our job on the lending side is to make sure you have the ability to repay. We are not relationship therapists.
But like the song says, how many of us have them? Friends. Ones we can depend on. Friends.
Well, I'd like to thank all of my friends and the good people for tuning in to the More Estate or the Working Name podcast. We so
still
appreciate
don't
the
have
support.
a name. Let's not throw out names like we have one yet.
I mean,
that's very misleading.
I am pro More Estate. I mean, I came up with it, so
you might be the only one.
I feel like it's a no right now. Like you hit me with the thing. You hit me with the perhaps. Like I feel like it's a no for you. But if it's a no, it's okay.
I still like the Working Title podcast.
The Working Title. Okay. Well,
or just Working Title.
Good people, throw something in the chat.
Please help us.
Yeah, we be needing help. Are there any marketing majors? Can we go on Fiverr? Maybe can they help us? Fiverr. Yes.
I mean that costs though. We're trying to do it for free. We're trying to leverage the brilliant minds that watch our show to give their opinions. I mean it's free. That's what we can afford. I mean, we could go to Fiverr, but I mean, why would we dig into, our wallets when people are willing to help us?
Got it. So
for free.
Round table for the names.
Or I could just really be speaking more highly of our audience than I should, assuming that they're going to lend their opinions.
I have a very high opinion of our audience. I think they're educated, good people that are interested in learning more about investing and purchasing homes. So I feel like they're going to help us out.
Yeah, help us out. Down below in the comments, we greatly appreciate it. Thank you so much for watching. Brian, if you want to, again, share with the beautiful people out there in internet land how they can find you on social.
Sure. If they're looking for me on Instagram, you can find me navigating your mortgage skies at Mortgage Pilot on Instagram.
I have so many questions. But for the sake of time,
focus on slanging the houses, sir. Slang the houses.
Okay. You can find me at Harvey Wurlitz, Instagram, TikTok, wherever you social online. Just throw in my name. You can find me and follow me there. Until next time, right? Yeah. I mean, I had fun.
I did too.
This was a lot less painless than I thought it was going to be.
Agreed.
I think I may come back next time.
Maybe. Okay. Maybe. Yeah. But make an appointment with my secretary. Put it on my calendar.
We're gonna need food though.
Food. I'm about a meal.
Yeah.
What are snacks at?
You tell me. I don't live here.
I mean, as a type 1 diabetic, I'm about the snacks.
Yeah.
Just don't tell my endocrinologist. They're healthy snacks. Wink, wink. But appreciate y'all.
He's using words that are too big for me to understand, so we should probably just end it there, so you can go see your endometriosis or what did you say? I don't know.
Endocrinologist.
See, that's what I'm saying. You're using words I don't know.
It's a type 1 diabetic thing. It's no fun. I promise. It's no fun.
No, I will take your word for that.
Yeah.
Yeah. So, beautiful people, thank you so much for watching. We will see you next time. Like I said, drop your show name ideas in the comments. And if you have any questions or any show recommendations, also down in the comments, drop it there for us. We appreciate you. We'll see you next time.
Mortgage Pilot out.